Hey guys, wanted to follow up on my post from last week regarding the Carnegie duplex that we have owner financing on. Why do I want to share this? Basically, I didn't know it could be done, and I was pretty proud of the creative financing that I was able to pull off. And when I say pull off, I don't want that to sound scummy in any way. Everyone is protected, everyone's going to get paid. But here's the story, here's the gist of it. So I purchased a duplex in Carnegie for $45,000. I structured the owner financing at $375 a month for 120 payments, so 10 years. Um, CapEx. It took a lot more money than I anticipated. I was hoping for maybe $30,000 in renovations, and once we rip stuff open, I kind of get have the tendency to get carried away. So I when I made that post, I thought I paid about $40,000 in CapEx. I just pulled the report for this video. It was actually $58,000. So thank goodness that the appraisal came in where it really should, but you never know. I'm pretty conservative when it comes to comps. But anyway, the appraisal came in good, and I got all my money out plus some, which is great. But how did I do that? Most banks I thought would make me refinance out of that first position loan that I had. I said, is there any way we can? I mean, obviously, I don't want to get rid of 0% financing that I have. All that money's going straight to principal. $375 a month is going straight to principal every single month. I didn't want to get rid of that. So I asked my banker what we could do. He said you could subordinate the loan if you get them to agree to go in second position. So I was like, what the hell? Let's give it a shot. So I did. The loan had been in place for pretty close to 1 year. I think maybe 10 or 11 months at this point. So had a good rapport. We built great rapport. Did everything I said I was going to do when we purchased the property. Have her on auto payments. Never missed a payment. She's getting it like clockwork by the 10th of every month. So that is huge, and I don't want to understate that. Like, you should not do this strategy or even get owner financing if you're not a man of your word or a woman of your word. If you're not going to take care of these people, don't listen to what I'm saying, because I don't want to be part of it. So anyway, so I gave the seller a call after I talked with my banker and found out it was possible that they would lend on it, and basically said, hey, you've been getting your money by the 10th every month. Don't want to change that, but unfortunately I have a lot more into this rehab than I anticipated, and found out I had even more than I thought. But I said, I'd like to put you in second position and get a loan from, at this point it was S&T Bank, and I'd like to put them as a lien holder on the property, but they'll only do it if they're in first position. So I'd like to move you to second position if you're agreeable to it, and I haven't done anything, haven't found any paperwork. But if you're willing, we'd put you in second position, and I wouldn't even change anything on the auto payments. You still get paid by the 10th every month. You'll still be protected. You'll be on the property. I can't sell it without you getting paid off, and everything. I just told her how she was protected, but there's a little bit of a risk going in second position. She said, Dan, I trust you. I know you'll take care of me. So with that said, I start going through the process, and that was heartwarming, to be honest. So I don't take that for granted at all. I know in my heart I'm never going to screw the bank, of course, and I always print out my credit score and give it to my owner finance sellers. I know I'm not going to screw them. I'm not going to screw the bank, obviously. So we went with it. So the duplex ended up appraising for $146,000. I was able to get a loan for $65,000 from S&T Bank, which was fantastic. Again, keep in mind, I thought at this point I only had $40,000 in the rehab, but had a lot more, while keeping what I had left. So I have maybe a little over $40,000, but roughly $40,000 on the owner finance position, and that is now in second position. The bank gave me the subordination agreement that she had to sign. We got it notarized and everything. So they filed all the paperwork. We're in good shape. So that means now I have roughly $105,000 in liens against the property. It appraised for $146,000. So you're right at 72% loan to value. So the bank has security. My owner my seller has security. I got money. I can pay off my private lenders that I borrowed money for the rehab on. And instead of paying hard money rates, and I have better hard money rates than a lot of people, but instead of paying hard money rates, I now have $65,000 at 4.25% over 20 years. And then I obviously have the 0% on the 9 years remaining on that original loan. So the key takeaways on this, and this takes time. This isn't something you could just go out and do tomorrow if you've never owned a property, built relationships and stuff like that. Bank relationships are key. One thing I find investors doing a lot, and sometimes, is always towing that line, is you can't show no income and you can't have shitty credit to do this. I love bank relationships. I am electing to show more income than I need to this year so that I can, because I don't have my W-2 income from my day job anymore. I mean, I'm 100% real estate, so I do have W-2 income, but it's from my company. I have to show income for me to be attractive to the bank. So I'm perhaps deferring some of my depreciation to make sure that I'm making a certain amount of money. So I got to implore you guys, if you want to use leverage to grow your portfolio, you need to show income. So that's one thing. Your credit score's got to be good. So if you guys have shitty credit, no income, you're gonna get, you're not gonna be able to do these creative things with banks because they're just not going to take the risk. You're not worth it. And then number two, you have to operate with 100% integrity, especially taking care of your owner finance sellers. I can't emphasize that enough. Every single owner finance seller I have either a video or written reference from them because it's a benefit to me, obviously, and it helps. I tell them, I said, I want to help build rapport more quickly with these future sellers. I said, they don't know me from anyone else. They don't know me from Matt Simmons or Alex or whoever. I want the leg up. So I'm giving you I have a credibility kit for my sellers, but especially for owner finance sellers. I'll print out my credit report. I'll show them my automatic payments, and I put that in a packet and I give that to them. So you guys should do that too. It's going to take you a while. You got to get these things and show a pattern of performance there. So long story short, you can subordinate those types of loans if you need to access equity. And obviously that helps you pay down principal and build wealth more quickly. So I hope that helps. I didn't know you could do that. You can. And happy investing. We'll see you guys later.